So welcome all participants for this webinar on Union Budget. Uh, Thank you all for registering and participating and giving us an opportunity to share our thoughts and also learn while we share our thoughts and take your queries. Today's session, the coverage is that we'll go for an overview of a budget. We will look at what the budget has been changed. We'll also be looking at what are the changes which has happened as far as the GST law is concerned, changes in customs and central excise, and we are restricting ourselves to share everything which is non-rate changes, because rate changes, there are a number of rate changes which has happened as far as the customs is concerned, and not all the products will be relevant for everyone. So thereby, to make it more effective and meaningful for every participants, we are not going for sharing the entire rate notification, but we are only covering the changes as far as the law is concerned. We will also have a sufficient time for question and answer. So this is how we have been planned, and I would be taking through the GST law. My colleague Asiya Begum, she is going to take on the changes in customs and the central excise law is concerned. Although there is only one single change as far as central excise, she will hopefully cover that change as well. So the people who doesn't know Asiya is a senior manager heading the audit wing at Iragang and Associates Hyderabad office. She's been with us for nearly 6 years now, and yeah, she's taking care of audits, and many of you would have been already interacted with her. Coming to me, most of you would be aware of me, but just as a matter of formality, I am Sudhir, Chartered Accountant, and leading the Hyderabad branch here of Iragang and Associates. That's a small intro about me. So without getting into much time, we will straight away get into looking at how the budget approach is and what is the changes as far as the GST law is concerned. Namrata, I hope this meeting is recorded.
Yes, sir, recorded.
Thank you. So coming to the budget approach, if you look at of late, the government has been looked as being revenue biased. Many of the changes which is happening is purely one-sided, and it is not having a equality among the taxpayer and the person who is doing the assessment. Most of the provisions which were being proposed to amend in the past and now which has been proposed to amend in this budget, a closer look of it is been looking at uh, the intention of the lawmaker is to curtail various fraudulent activity which has been happened under the GST regime, and which has made them to think that every businessman and every taxpayer has indulged in one or the other sort of a unfair practices, and thereby they are looking everybody with a suspicion or a closed glance, which is creating unnecessary hardship for a genuine taxpayers. So unfortunately, that mischief of not even less than 0.5% of the total taxpayer, the 100% of the taxpayers are being subjected to various provision and various challenges. So this government is not having any years to consider the challenges a genuine businessman is going. There has been a talk of ease of doing business, ease of doing business 2.0. All this ease of doing business is being looked at giving and quick approvals for their registration. But once the approvals and all has been given, lot of revenue related intervention in the business, which is not allowing the ease of business, has been totally forgotten as far as this budget and also the previous budgets as like concerned. So if you look at of late, they are talking more about the revenue every time in the month end, in the quarter end, in the year end. all the taxpayers almost are getting phone calls. They're checking whether we have filed the returns. If we have not filed the returns, they are curious to know, saying that how much of tax we are anticipating to pay. So that all looks at that there is a lot of targets being given to the officers with an high revenue pressure. So thereby that the representation of the officers, the lower officers, when they have been asked how why the tax has not been collected, they are giving certain things that certain excuses, say because of this provision, because of this interpretation, we are not able to correct. And time and again, every budget on budget and every notification on notification, they are trying to correct and give enormous power to the taxing authority, which will have a lot of challenges because of this draconian powers which has been given. An honest taxpayer also could be harassed. So that is something which is unfortunate, which has been happening. Having said that, if you look at judiciaries have told time and again that although the statute have the powers to give to notify the officers to execute such uh, activities which is required for safeguarding of the revenue, they have time and again told that all these powers should be used as a exception. It should not be used as a matter of routine. Most of you would be aware there was a Telangana-based taxpayer, Satyam Paper, who had a challenge in terms of EWay bill. There was a small deviation in the route, and thereby they were seized, saying that they are evading the tax. And the High Court of Telangana had given a verdict saying that there is no evasion, and the matter was remanded with a cost on the officer. Department went on an appeal to Supreme Court. Supreme Court also confirmed that and increased the cost on the officer. So thereby the directions of high courts and Supreme Courts are very clear. While you are having a power, the power has to be exercised on an exception basis and only on those people who have an intention to evade the payment of tax, and not for those genuine taxpayer where some clerical error has happened, or a unwillful omission has happened, or an error has been committed. So these are the things which you should be aware of. Although there is a power, it can always be challenged whenever there is a genuine case. If there is a case of, say, bogus invoice or things like that, then that is not going to help you at all. This sort of a provision. If you have not indulged in any of the unfair means or illegal activities, then you can always challenge this power. That is something which we should all be aware of it. A proper forum of challenging, the methodology of the challenging may have to be brainstormed on a case-to-case basis. The budget, we were also looking at what could be the way forward in terms of subsuming the electricity, the five fuels which has been kept out of the GST, the stamp duty. So there has been a lot of talks which is happening on all these three things, but this budget, there is no mention of anything of this sort. So they would want to continue to levy the existing taxes on the fuels, excise duty, the electricity duties and the stamp duties also they want to continue as is. So we may have to wait for another 1 year for us to look at if at all there is going to be a proposal to remove the existing duties and come to the center GST regime for the fuels is concerned. It is very botheration because diesel and some oils and all those things have been taxed up to 55% in the present today, under the tax is collected by the central excise and the VAT officers together. So it's a huge amount of money, and because of the fuel prices has been substantially increased, there is something which there is a need of a reform as far as the subsuming these taxes under GST. But this budget was totally silent about this. This bill, finance bill, we were also expecting that there could be some correction of the provisions to enable GST appellate tribunal. Most of you would be aware that any litigation which happens, there is a first appeal, which would be your commissioner appeals or joint commissioner appeals, as the case may be, if you are with the state authorities. And there is going to be a second appeal also, which is going to be there before the appellate tribunal. Under GST, there is no appellate tribunal formed yet because there is a stay of Madras High Court on the appellate tribunal because somebody has challenged the constitution of this members in this tribunal, which is having one technical member from state, one technical member from the center, and one judicial member. So there are two people always coming from the revenue background, and there is an high chance that they are going to be revenue biased vis-a-vis one person who is only looking at a judicial. So always whenever there is a tie in the order also 2:1, if it is there, then always the revenue gets an advantage over it. So thereby there is a stay which has been happened. So a lot of representations was been made to continue the existing tribunal setup as far as the SESTAT is concerned, where you have one technical and one judicial member. So there need not be two technical member representing the revenue of state and center. It could be one common officer from the technical side who could be chairing or sitting in the bench for deciding these matters which is there in the dispute as far as GST is concerned. We were expecting some amendment to come in this regard, which has not at all happened, and thereby all those cases where the order has been passed and there is the appeal has to be filed before the appellate tribunal, you have to still wait, or if at all it is urgent, you may have to go to the writ jurisdiction in the high court. So that is something which has not been there. There was also a talk which was happening about the national appellate tribunal, where they were looking at differences in advance ruling authority. Two different state advance ruling authority taking two different views. That has to be refers to a national appellate advance ruling appellate tribunal, which is going to give the final view, and that is going to settle a lot of disputes which has been there. So there is no mention about this also in this particular budget, which was something which was expected. Coming to the collections of the GST, if you look at, there has been a huge jump in the collection, and there is, I think, January data is here about 1.38 crores is the collection which has been happened. So there was also a special mention out of the finance minister's prepared speech on this particular event that the revenue of the GST is growing day by day. So that also implies that there is a lot of high rates which has been there, and a lot of things which is not allowed as an input tax credit is adding to the collection of the GST. Coming to the budget changes as far as the GST is concerned, so just to look at the overview of it, each one of these items I'm going to explain to you in detail, but just to get an overview of it, there are certain changes in terms of the input tax credit is concerned. They have added a new condition for taking the credit. They have also looked at reporting of an unavailable credit. They have also looked at reversal of tax if the vendor is not paid the GST. That provision also is I'm going to explain. There are some extension of the due dates. I'll take you through so that extension. There is a retrospective amendment of applicability of interest in case of wrong availment and utilization. I will also give you a snapshot as to what exactly those provisions are. There are certain changes which is there as far as the refund is concerned. Inter-unit transfer of e-cash ledger. Uh, some changes as far as the returns and cancellation of registrations are there, and there are certain retrospective exemption which has been given. So these are all the things which is there, and a broad overview if you have to look at from the GST proposals in this budget. So this slide I have not covered the customs overview, which will be separately taken by Asiya Begum after I am completing with my talk on GST. So these are the things. Let's get into one after the other. Before I get into a new conditions which has been prescribed for taking this input tax credit, let's look at what is the what has been an history as far as the input tax credit is concerned. Pre-GST, there was the law which was been there, which is been there now, which has been enacted, had a provision of something called as a matching concept. So what is this matching concept? The matching concept is where every person has to file his GSTR1, which gets auto-populated as 2A by the recipient, and if something is not getting auto-populated, he can upload it in 2, and that is going to come into my 1A, and I have to take it into 1. Me as a supplier and he as a customer. So this was a beautiful mechanism which had a two-way communication, and thereby anything which is getting missed was being rectified. There was also a provision to deal with how, if you are taking an excess input tax credit or higher deduction of the output tax, the entire mechanism was being very clear. But somehow there was a protest by the industry that this matching concept has to be removed, and thereby when the law was enacted on 20th of June 2017, these provisions, that is section 41, 42, portion of 38, these were the provisions which was not being made effective. That is, it was inoperative. It was there in the law, but it was never inoperative. So thereby, from 28th of June 2017, there was no matching concept, nothing was required. In lieu of GSTR3, they bought GSTR3, they bought GSTR3B returns, where you could take this input tax credit based on the summary. You just mentioned 10 lakh is the input tax credit, no need to give a breakup. So that was the law which was there till 31st of, mind it, 31st of December 2021. This is the law which has been there. However, in between, in October 2019, they have introduced a new rule, which was Rule 36(4), where they gave a restriction of credit and they gave a buffer. So, first, the rule says that you will be eligible to take the credit only to the extent what is available in your PUA. Now, how a two-way is an amount is reflected into a, whenever my vendor is uploading is or saving his invoice in GSTR1, that reflects in my GSTR2A. And they started with a buffer of 20%, which was reduced to 10% in December 2019, and again reduced to 5% in December 2020. So thereby they introduced a concept by way of a rule saying that you will be able to take the credit only to the extent of 2A plus a buffer of 20, 10 and 5 as the case may be given. Subject to you have a valid invoice and all the conditions are satisfied, you can take the credit only in that particular buffer. So this was the rule which was there. Plus, please mind it, there was no backup law to encourage this rule. There was no powers which was given to the rules to give such provision. So this rule was not having a backup of the act, and thereby it is easily challengeable that the 36(4) is not valid at all. Then in October 2021, they came up with a return called as 2B returns. So they differentiated 2A and 2B, saying that 2A is a cumulative return, which is not non-static return. It will keep on changing based on the latest updates which is happening. Whereas 2B will be giving you a credit which has been uploaded in that particular month. So thereby the credit was insisted to be taken as per 2B and not as per 2A. 2A and 2B are not same at all. Coming to January 2022, basically the Union Budget 2021 made a proposal of introduction of a 16(2) AA, a new condition for taking the credit, where they insisted the amount which is reflected in 2B, then only you can take the credit. So thereby, please mind it, up to December 2021, 31st December 2021, there is no condition for amount to be reflected in your 2B for you to take the credit. Sudhir, you are telling this, but there are n number of notices I have received. I have received for 18, 19, 19, 20, 2021, and they are not giving a credit which is more than 2A. All these notices are contestable, and if it is going into the higher level, there is a huge chance of success. Thereby, the department also has noticed this, and thereby they have amended the rule with a prospective effect and not a retrospective effect to bring in those provisions to enact this particular provision. So this was there till 31st of December 2021. A small background as to why this particular rule was being brought. For them, the department wanted to ensure that whatever the input tax credit is taken by you was duly paid by your vendor. So then only you will take the credit. So there was an hack here. For you to get something reflected in 2B, me as your vendor, if I am uploading my GSTR1, that is sufficient. Now GSTR1, what is a returns? GSTR1 is only a returns of your sales summary. It is not a returns where you will make your payment. So what smartly I did is that there was 10 invoices, 1 lakh each. I uploaded a turnover of 10 lakhs and gave the credit to my customers, various customers of say 1.8 lakhs. But I did not have money to pay 1.8 lakhs. When I filed my GSTR 3B, I filed it only for 10,000 rupees to the extent what I had money, or I have filed the nil returns. So technically GSTR 1 has been uploaded, GSTR 3B also has been uploaded. Thereby this reflects under GSTR 2B to you, and you are eligible, you are taking the credit showing this. But department was still losing on something. They brought a provision saying that if there is a difference between GSTR 1 and GSTR 3B, whatever the amount which is assessed in GSTR 1 in excess of 3B is deemed to be a self-assessed amount, and they can go for a recovery of this particular provision. When this particular provision is there, please mind it, this is the headache of the departmental officer that they have to do the recovery provision. So it is again an effort which is there for the department. Now what they are looking at is, why should our officers take that efforts of doing a recovery? Why don't we do a further mechanism to restrict the credit to the person taking the credit, and thereby they have introduced a new condition or proposing to introduce a new condition in the Finance Bill 2022. This new condition is again for 16BA. Section 16 is a conditions for availing the credit. So it is a right provision where they have touched it, where they are saying you have to 16AA is not been taken out. Please mind it. 16AA is still there. 16A is there. AA is there. 16B is there. 16BA is a new condition which has been added, where they are saying as per 16A, you should have an invoice. Second is as per 16AA, it should have been uploaded and it should be there in your GSTR to be no compromise. Third condition now they are adding is that the credit which is reflecting in your 2B or the auto-generated input statement should not have marked this credit as an ineligible credit or a credit which is not available. That means it should not have been restricted. It should not be restricted under a new provision of 38, which has been introduced in this particular act. 38 was there in effective. They have replaced the entire 38 with a totally a new set of provision. So for a moment, please understand that there is an additional condition that if a credit is will be allowed only when it is not restricted under 38, subject to certain things I have to check as far as my vendor is concerned, right? So that communication is available. Let's look at what is the section 38 talks about when the credit could be restricted. What they are saying, the credit, your credit would be restricted when vendor has issued an invoice, uh, not invoice, he has uploaded his GSTR1 from a specified period of a registration. This is basically, I think, is for a new registered people. So during a certain period of registration, if he has uploaded anything, then to that extent, you are not eligible for the credit. What is that particular period? The clarity has been awaited. This entire provision, we have to look at what is their intending. They may be intending a pre-registration credit. That is, I am uploading, I have actually issued an invoice. After that, I have taken a registration and I am uploading GSTR1 with a pre-registered credit or within the permissible period that is not eligible for a credit to you, is maybe something they are trying to coin here. So this is one condition based on which you will not be eligible to take the credit. Second, the supplier has not paid the GST for some prescribed period. So for one particular period, if you are not filed GSTR 3B, then although it is appearing in your, although I filed GSTR 1, it is coming in your 2B, it will be marked as not eligible for taking the credit. Because the condition of 38 has not been satisfied, you will not be eligible to take the credit. The other condition is that you have filed the returns, no problem, but there should not be difference between 1 and 3B. Please mind, second one, please observe, second one it says non-filing of the return itself. Non-payment is non-filing of GSTR 3B itself. One mischief 1.8 lakhs, I am not filing GSTR 3B at all. But one is there, all these days we are enjoying the credit because it was part of your 2B. Now I have uploaded the 3B in a scenario, but it is only for 10,000 rupees. I have short paid 1,70,000 rupees in my example, in which case, if the difference can be within a prescribed period, how much prescribed difference could be there? That difference they are going to prescribe in a rule. Today they are not notified. We have to wait for these rules to be notified. If it is beyond this prescribed limit of a difference, then to that extent your credit will be ineligible. So mostly what I am looking at, even if you look at the provision, it says the credit could be made ineligible either partly or fully, either in whole or in part part. So that is what they are talking about. So thereby maybe out of the example, if I have to take, maybe 10% of the duty is unpaid by me, or there is a difference between 1 and 3B, and that is 10% is the difference which has been unpaid by me. Maybe they will say that 10% of the credit to all my customers is ineligible to be taken credit. To the extent of 10% I have not paid to the government. So to that extent, although it is reflecting in your 2B the entire amount, maybe a portion of that amount will be reflected as not available. To that extent, you will not be eligible to take the credit. Now consider the third scenario. First scenario, not filed the 3B at all. Second scenario, filed 3B, but there is a difference. Third scenario, there is no difference, but I have taken the credit in excess of 2B and I have done the returns. That means to say what mischief I have done here, if you look at, so if 3B is not been filed, you will not be eligible. I have filed the 3B. Now the difference cannot be more than prescribed for you to avail the credit, or it will become ineligible for you if there is a more difference which has been there. So I will play one more mischief. What I will say, I will take some dummy credit or an ad hoc credit, which is not reflecting in my 2B. So I have a credit in my 2B is only 20,000 rupees, but I will inflate it by another 1,60,000 rupees and pay entire 1,80,000 and say, see, I have filed uploaded GSTR 3B condition satisfied, and there is no difference between 1 and 3B. That condition is also satisfied. Thereby, don't deny the credit to my customer. No, sorry, sir. You have paid the credit in excess of the amount which is reflecting in your 2B than the prescribed limit, and thereby your customer to that extent will not be eligible to take the credit. So this is a catch which is there here. And the fourth another condition which is coming here is that there is a 86B one particular provision rule where they say that if your turnover value of a supplies during the month is more than 50 lakh rupees, then you can maximum pay under electronic credit ledger only 99%. That means 1% of the liability has to be paid in your electronic cash ledger. By chance I have defaulted this, then also you as my customer will not be eligible to take the credit. If I am the person who has prescribed class, then you will not be eligible to take the credit. So all these conditions has to be satisfied. Then only, if I am not filling of all those things, that means I am totally very, very genuine, I am Satya Chandra, then only you will be eligible to take the credit. If I have done certain mischief, you will not be eligible to take the credit. So that is how a condition has been satisfied. So now, all these days, you were only bothered of following it up to filing GSTR 1. After that, you are not bothered. If it is coming in your 2B, you are taking the credit. That too from when? 1st of January 2022 only. Prior to that, you are doing it as a practice. If that is a good, if you have done that, but even if you have not missed it, there is a notice, we can always fight it out, don't worry about it. But from 1st of January 2022, you are looking at only getting this credit under 2B. After the enactment of this particular provision and the notification of the effective date of this, you should also ensure that the tax has to be paid by vendor without any deviation, without any difference between 1 and 3B, without taking excess credit than your 2B, without uh, utilizing 100% if it is applicable more than 50 lakhs. Only in such case you will be eligible to take the credit. So maybe what we have to look at is, all these days we were bothered about vendor. Now you have to look at vendor's vendor also. Your vendor is good, but his vendor are bad, then that will be affecting you also. So thereby the unlimited chain is being created here. So thereby we have to be very, very clear about this particular provision. In past, a lot of people have questioned this provision. There are decisions which has been coming. Kolkata High Court has recently told that you cannot make recipient responsible for the fault of the supplier, but all those decisions which has been there was before to such a specific condition which was being given under the input tax credit provision in a section. If a condition has been given, there are n number of rulings under central excise and VAT and many other provisions where they've told, no doubt the sunvat credit is your vested right. However, government has all the powers to impose such restrictions and conditions to safeguard the revenue. Thereby, it is a vested right subject to fulfillment of a condition. You cannot say it's an unconditional right. If a condition has been prescribed in so and so manner, whether that can be overseen judicially only on a concept that you should not touch the recipient, only should be said touched by the service provider, it is not something which is very, very clear. If you look at this background of this entire provision, the entire background is about bogus billing. So what exactly happened is, people actually did ensure that it was there in their 2A or 2B as the case may be. They also ensured taking 3B. They also tallied the value of 3B with GSTR 1. Everything was being done. But they don't know whether the 3B has been paid by a genuine credit or a ungenuine credit. So thereby now the system will auto throw up and say that it has been paid by ungenuine credit, and thereby you have to do this. So now onwards, choosing the vendor will be the upmost criteria of the business. So you should have only A and B category of vendors. You should eliminate all C categories. A category of the vendor is super compliance. There is no complaint at all. B, there is some lag, but here some restrictions has to be given and you have to do. C are the people who are not at all doing this compliance properly. You have to have a system of having an alternative vendor empanelment, vendor rating, 70-30, ensure 70% of your credit which is coming from 30% of the vendors are 100% clear and all the conditions are satisfied. Take a risk of only those. Balance 70% of the vendors where they are giving 30% of the credit, only there this risk can be afforded, not in the first one. So these are the things which you have to look at, make vendor compliance much more rigid. Otherwise, you will end up losing the credit. So this is the condition which has been prescribed as far as the new section 38 is concerned. There are certain legal issues. ITC can be availed on the basis of 2B. Today, there are certain decisions which is there. Recovery from recipient from this I've already told, action quashed by the VAT under GST. So this has been already told. I have talked about all these things already. There is a doctrine of impossibility. Earlier, what we were saying is, although there was a condition saying that I have to prove that they have paid the tax, now whether they have paid the tax with a genuine input tax credit or a bogus input tax credit, how will I get to know? So thereby, there was always claiming doctrine of impossibility and saying that I'm not eligible to take the credit. Now, whether he has paid genuine or otherwise has been reflected in your thing because he has not satisfied a certain condition. Maybe the reason will not come, but it has been reflected there for whatever want of reason is concerned. So can I still plead doctrine of impossibility is a question which is going to be there. Very importantly, there was a council minutes notes, the minutes, GST council meeting minutes. where they told that as a matter of routine, you should not go to a recipient, you should always go to a supplier. Only when the supplier is not traceable or you are not able to recover from that person, then only come to the recipient. Unfortunately, none of the provisions under the GST law or the rules made thereunder or a clarifications issued or a notification is touching on this particular point. So this clearly indicates that the revenue is only looking at one-sided. They are not looking at any advantage which has to be given for a genuine taxpayer has not been looked at all. So these are the few things which I've already discussed about. Then what is going to be the impact? The vendor's default will cost you. So vendor screening and grading, grooming them, training them, all those things becomes very, very important. You may have to do an extensive operating procedure for your vendors, how they have to do, what are the compliance, what documents, when they are eligible for the payment, have an extensive education, have a handholding for them, look at what are the issues, why they are not able to comply, and see whether something can be done from your side. So those sort of things is very, very, very important. It makes sense if you are dealing with an high number of vendors with an high value. It makes sense that you make a vendor awareness program on this particular provision very, very widely and on one. This is something which will be very, very important. Otherwise, there is going to be a lot of cost with the vendor communication on a day-to-day basis, which has been done, which has not been done, has to be looked at. You also have to look at revisit your POs and agreements and see whether something needs to be modified to add a condition saying that, okay, this is the amount of GST is payable extra, no problem. But that extra will be paid subject to so and so, so and so, so and so, so and so. It has not been restricted under section 38 and things like that. If something is there, if it is already paid, it should be recoverable or it will be withheld. Only after condition is fulfilled, it will be paid. All those terms has to be revisited as far as the POs and agreements are concerned. So this may also have some effect on your cash flows. You cannot take a risk of going ahead and taking this credit. So when you are restricting the credits, then you have to pump in a lot of money to pay your GST tax. Otherwise, your customer is not eligible. Even if you are B2C, you will not be afford to pay lesser tax. So thereby, this requires a lot of pumping of money. Uh, some other changes which has been happened as far as the ITC is concerned, they have removed this matching concept, which I explained to you, GSTR 1, 2, 3 concept, which was there, which was governed by section 42, 43, to some extent of 38 and 43A. All those things has been scrapped now. They are only looking at GSTR 2B as the tool to control with what is available, what is not available, subject to section 38. So that is what they have looked at. They have also looked at there was a provisional availment of credit provision which was given under section 41. They have revamped this particular, proposing to revamp this particular section. What they are saying is that you will be eligible to take the credit based on whatever the statement and things like that. But if it is known that the vendor has not paid the tax, then you have to reverse it along with the interest. On a later date, if the vendor has paid, you can take the credit back. But interest, whatever is paid, is gone. So whether the interest is payable, not payable, is a separate thing. But this is what the correction which has been happened. So that is something which you should be aware of. There is a lot small confusion which is coming here. When section 38 has scrutinized that it has not been paid in excess of 28 or 1 and 3, 1 and 3B is mismatching. After it is scrutinized, it has been shown as available and you have taken the credit. Where is the question of you taking the credit where vendor has not paid? Why this particular provision is there? That means to say, can I take the credit and take the chance of not reversing? So can I take the credit in excess of 2B because 41 allows me to take the credit, and only when he is not paying I have to reverse it again. After he has paid, I have to retake the credit. How exactly this mechanism is going to work, we had to have a fine print for the rules to come here. So maybe my assumption is because there is a gap of 1 month, a GSTR 1 uploaded in this particular for the sales of this particular month will be done in the next month. 3B also is paid in next month, but the credit is been taken in this month. So is this rule 41 only is mentioning on that 1 month where you will be eligible to take the credit, and in the next month when you get to know it is not payable, then it is going to reverse? Is that what they are talking about? We need to wait for a clarity, because as per as section 38 condition is also concerned, 11th is the due date for filing the returns, 20th is the payment. So 11th, when it has been uploaded and it is coming to you on 13th or 14th, as the case may be, GSTR 2B, how GSTR 2B will ensure that there is no difference between 1 and 3B and things like that, because 3B is not at all filed, or 2B versus 3B, all those things has not been there. So maybe there is a 1 month of provisional credit which you will take, and next month it will be reflected that this was not eligible for the previous month or something, which makes you to reverse the credit along with the interest for one particular month. And after it has been cleared, after it has been paid by your vendor, then you will be eligible to retake the credit. Maybe that is a mechanism which we may have to holistically look at. What is the mechanism has been to be prescribed as far as the rules is concerned. Yeah, so these were the few provisions which has been there. I've already discussed all these provisions. Then there is also a change in the time limit which has been happened. Actually, I have missed writing one of the time limit here. It is for 4 cases. The time limits has been enhanced. What is the last date for me taking the input tax credit? For the financial year, say 22-23 is concerned, I could have taken the credit up to September 2023, not September 2023. Due date for filing the returns of September 2023. That means on 20th of October 2023, I was eligible to take the credit. Now what they have done, they have removed this reference to the due date of the September, and they are talking about 30th September 2023 to be the date, an absolute date, which is not going to go here and there. So November 30th November 2023, technically you will file the returns for November on 20th of December. So there is a gap of 2 months which has been given. Earlier is October, now it is going to December. 2 months of enhancement of the thing has been given, which is good in a way. But however, if you why this has been done is because you need to follow up on those unavailable credit with your vendor, and you should ensure that the credit is going to get. Maybe considering this, they have given 2 months of extra time for this, which is a sort of a welcome move, which I can say. So this same 30th November has been changed in another 4 places in addition to this. One is for issuing of a credit note. So most of you would be aware that if I have excess charged the tax, or excess declared the value, or there is a rejection, or there is a deficiency of provision of goods or services, I can issue a credit note and adjust the original tax paid. It could be also for a discount, which is subject to condition allowed. I can issue a credit note and I can go for a adjustment of the tax payment. The time limit for this was 20th of October. Straight away I'm taking that has been done to 20th of December now, or 30th November technically. Similarly, for amending GSTR 1, amending or GSTR 3B, and amending the TCS returns, for all these provisions, they have increased it to 30th of November. A common timeline has been enhanced. ITC, interest, there is a small retrospective amendment which they have brought in. Interest had 2 subsections separately. The first subsection was talking about levying of interest in case of short payment of tax or a non-payment of tax. The second subsection was talking about levying a tax, levying an interest for excess availment of credit under 42, or a short excess reduction of the output tax under 43. As I told, 42-43 was not at all given effective to, it was inoperative, and thereby this particular provision was not at all applicable. But the rate prescribed for that was 24% up to 24, and it was notified to be there at 24%. So lot of times the department was of the view, and many of the people in the trades were confused. If you are erroneously taken a credit and you have utilized the credit, the rate of application should be 24%, not 18%. Absolutely no, it is not at all there. Erroneously availment and utilization of the credit was not at all prescribed, because the entire second section was 42-43 reference, and because it is inoperative, you should have ignored it. So considering that this particular provision which is not been there, they have looked at removing this subsection 3 of section 50 and replacing with a new provision where they're saying that if you have wrongly availed and utilized the credit, then you will be liable for an interest which will go up to 24%, and the notification which was prescribing 24% in this regard has been reduced to 18%. But this provision is from a retrospective effect from 1st of July 2017. So that is something which we should be clear about. Now, because it is availing and utilization which has been happened, it will not cover a case of you have availed the credit wrongly and you have never utilized it. That means to say that you took an invoice on one particular invoice where the GST was 10,000 rupees. From that date till the actual date of reversal, you had a closing balance of electronic credit ledger which was matching for 10,000, which was in excess of 10,000 rupees. No interest is payable. That is what is something which is clearly, which is coming out, which was also there in many of the decisions which was there under the central excise law, which is going to be there, because there was no loss to the government. If I have put that this is the eligible credit in my books of accounts, government has not lost it. Government will lose it only when I have utilized the erroneous credit, then only they are going to utilize it. So whether this 18% is going to come up with a new interest liability at all has to be looked at very, very closely. In my opinion, if there was an erroneous credit which was taken and it was also utilized, automatically you have short pay. So your first subsection 2 would have been applied there only because there is a short payment which has been happened there. You would have paid up 18% interest upfront there only. So thereby this retrospective effect, it is not actually including any new interest, is my personal view on this. We need to do further examination of this particular provision. Whether interest to be paid, refund, very important. Interestingly, as I told, department was the view that any erroneously availed and utilized credit was at 24%, not at 18%. They demanded and made people pay 24%. Can I go for a refund of it? Answer is yes, you can go for a refund of it. Even the time limit which is prescribed is only for the tax and not for the interest. So you can go for a refund without any time limit here, because no money can be kept by the department without an authority of law. When 18% has been there, you should be eligible for taking that particular benefit. Next is there is a linkage between GSTR 1 and 3B. This don't get surplused. This was already be there in the law, but it did not have an authority. The act did not prescribe. What is that? It says if you have to file your GSTR 1 of this month, you should have already filed your GSTR 1 of the previous month. If you are supposed to file GSTR 3B of this month, you should have filed GSTR 1 and 3B of previous month, then only you will be able to upload GSTR 3B. This was already there in the rules, but the act did not give the rules a power to prescribe a procedure or a restriction to do so. Now they have been bringing up this particular provision. So the portal which is already working in this fashion and restricting the credit is illegal till this particular provision is going to be made effective. So thereby, any such challenges which has been there, you could go ahead and go for filing the returns manually, because if your portal is not in accordance with the law, you can disregard and do the manual process based on various high courts which has been held. Now there is what you call another thing which is coming up as far as this returns is concerned. This provision is there in the act. It says government, by recommendation of the GST Council, can exempt such a person or a class of a person for this particular provision. That means they can allow to file the return only even if the previous month returns has not been filed, only by a specific allowing. Sorry. Changes in GST refund. So refund provision has also gone into certain changes. One is electronic cash ledger. Again, don't take it surprise. This is what is there today also. Tomorrow also they are proposing to do this. It is already in practice, but it did not have a legal backup, and now they have got this particular amendment. I have paid excess amount in my electronic cash ledger. 10 lakh rupees was the liability. I have paid 12 lakh rupees, 2 lakh rupees is laying there. What the provision which is there in the statute today is there, if you upload your GSTR 3B, That 2 lakh which is excess should automatically come to your account without question asked, full stop. That is what was supposed to be done. But the portal was never developed like that. If you want the 2 lakhs, you were supposed to file an application in the portal, and they were making the payment to you because they want to avoid the unnecessary cash outflow every month. They want to sit with the cash, whatever they are having department. So thereby now they have rectified what the practice is there in terms of doing this particular law, where they say now that no automatic refund, it will be through a application you have to make as may be prescribed. The major challenge is it is going for an adjudication. When it is going for an adjudication, unnecessary intervention with the department, lot of questioning and unintended cost will be incurring. So thereby it is not a very, very encouraging move. A representation has to be made saying that, okay, we are going to make an application, but it has to be paid without asking question. It's my money in your wallet. That's all. It is in your account. Just give it to me. That's all. Don't ask any reasons. So this is something which we have to look at. We had a peculiar case in Pune. One of our client had an excess payment which was being done, and they wanted our assistance to do this particular filing. We told no problem at all, sir. Very easy. Your cash is there. No interpretation. Nothing. We are going to get the credit. But unfortunately, we were being assessed with the state authorities of Maharashtra, and the officer asked a question, and we were not able to digest a question. What the officer told is, you have paid 12 lakhs. That means you would have assumed a turnover of X. On that 18% is coming 12. But after that you have paid only 10 lakhs. That means you have deleted certain invoices. Which are those invoices which you have deleted? Which are the vendors you had originally given? Have they taken the credit? Have they not taken the credit? Give me the details is what the officer is asking. My God. So that was a mere misinterpretation of the log liability which is going to be there, and I paid excess so that it will be there in my cash ledger. So this sort of a questions you have been asked. So I am only worried is that this money should not get into a rounds of a litigation for us to get our own money. But unfortunately, that is a proposal which has been there. There is another provision which is there now, where they talk about withholding and deduction of the tax when the refund has to be given. Withholding is in a case where you have not filed your returns, or there is an unpaid liability which is there. Then they can deduct the liability which has been there against the refund and release it. Scenario one, I have not filed the returns. They'll say you file the returns, take the refund, and there is no due, take the refund. Scenario two, I filed all my returns, but there is a demand which I have to pay, which I have not paid. They will deduct the amount and then only give it. However, the deduction will not be made if it has been stayed by any court or a tribunal or an appellate authority. It will not be made. So thereby, at the show cause notice also they cannot demand, because show cause notice is not it cannot be deducted because it is not a demand by itself. A demand and you have not appealed on it and stay has not been bought, only to that extent it could have been deducted. This provision was applicable only for exports and inverted duty structure. Now this provision is applicable for all refund. That is your electronic credit refunds, UN related refunds, erroneous payment refund, everything it will be applicable. So one has to be very, very careful that you have filed all your returns, cleared all your dues, then only go for a refund application. Otherwise, it will be sanctioned and it will be withheld. Then there is a UNO consulates, foreign consulates, embassies, and other UN organizations which has been there, United Nations organization, affiliated organizations. They are eligible to claim the GST paid on the inward supplies, and the time limit was 6 months. Now they have enhanced that to 2 years. So that is something which is they have done. Second is, as far as the SEZ is concerned, SEZ, when a supplies to SEZ has been made, there was no sufficient clarity as to what should be taken as a relevant date to calculate the 2 years time limit. There are a lot of confusions on this particular thing. There was some decisions also in this particular regard. Now they have brought in a clarity saying that it will be the invoice due date for that particular month from that day 2 days. So I have issued an invoice to SEZ in the month of January 2022. 20th of February will be a relevant date. From within 20th February, within 2 years, I have to go for a refund. This is more of a clarificatory things which has come to rest various disputes which was there. Then you have an interunit transfer of electronic cash ledger. So this is again a very welcome move. I can say that most of you would be aware. Initially, if I have made any excess payment of say IGST to my electronic cash ledger, but actually the liability was supposed to be paid CGST and SGST. I have to again remit the money to CGST, SGST account and make the payment, and IGST have to go for a refund mechanism. So that is how it was there, and it was having a lot of challenges because some cases, the finer aspect, whether it is an IGST, CGST, SGST, you would have got to know on a later date, by which time already remittance would have been done. So considering this challenge, in the previous budget, they they allowed for transfer of IGST balance into CGST, SGST, or vice versa, the transfer of balance of electronic cash ledger, not for credit, please mind it, electronic cash ledger. Whatever the balance is, the transfer was been allowed by a certain particular provision, certain forms has to be uploaded, and you could have done that. Now, representation was made, okay, this is very good. IGST you are giving against CGST, SGST, vice versa. But now I should have actually paid for my Telangana registration. I erroneously paid for my Karnataka registration. Now, Karnataka registration doesn't have a liability at all, but Telangana is having a liability. Then I have to go for a refund there and I have to pay here. I was not allowed to transfer. So now the budget proposal says that Karnataka amount, whatever is there, can be transferred to your Telangana account. So that GST can be transferred. Please mind, it is only in case of same entity, same PAN, not your sister concerns, two different legal entities. No, same legal entity, same PAN, two GST registrations has been taken. Only in such case, the inter-unit transfer of e-cash ledger can be done. And this will not be permitted if the transferring authority has a liability unpaid. Say Karnataka has a liability unpaid, they will not allow to transfer the credit. If there is no liability unpaid there, then they can transfer here and utilize for Telangana. And this entire provision will be taken as a refund. So thereby the time limit and all those things has to be complied, which is applicable for the refund. Then you have a cancellation of registration, a particular provision which has been talked about. Most of you are aware that the registration can be cancelled if you are not filing a returns for a certain period. So there are two provisions, one for composition and other taxpayer. First, I'll come to other taxpayer. Other taxpayer, as of now, they'll be eligible to cancel your registration if you have not filed the return for 6 months. Now they are changing this period to such a consecutive period as may be prescribed. We have to wait and watch what they are going to look at in the rules. As of now, it has not been notified. As far as the composition tax is concerned, it was 3 consecutive tax period returns has not been filed. Then only they can have gone for a cancellation. Now these people have to make a quarterly payment by using some CMP returns, and the GSTR for annual returns ever filed. So closely looking at it, it is only an annual return is a return and not the interim payment is a return. So thereby they were to wait for 3 years, then only they can go for cancellation. Now what they are saying, 3 months from the end of the due date, if you are not done, I'm going to go for cancellation. Still the confusion is whether it has to be looked at that quarterly filing or it has to be looked at GSTR4. We have to have a clarity which is to be awaited, but this is what something which is there. Then there is a coming to the almost the last portion of my slides. There is a retrospective amendment which has been there in case of 2 cases. Rather, one is only a procedural where www.gst.gov.in has been adopted as a common portal for all the purpose except for EWay bill filing and e-invoicing. This is the common portal which has to be taken. Other than this, 2 retrospective exemption, one is for unintended waste which has been produced during the processing of the fish meal, except that should not be a fish oil, that is exempted up to 30th of September 2019 with retrospective effect from 1st of July 2017. After 30th September 2019, is it taxable? No. 30th September 2019, they gave a prospective exemption. Now they are giving a retrospective effect for that. That's all. What if I already paid tax because there was a tax due or voluntarily was paid? No refund, please. Don't ask. So is it arbitrary? Yes, could be looked at. Second is there is a liquor license given by the state authorities that liability was supposed to be paid by the recipient under reverse charge mechanism. If it has not been paid, an exemption was given from 30th of September. Now a retrospective effect from 1st of July to 30th September 2019 is also been given. Here the question comes up is that if I have already paid, can I go for a refund? Answer is again no. But however, why should I take an exemption under this notification? Can I say that this was not a service at all. A license which has been there has to be taken, which is a statutory requirement and not a service which has been provided by a state government. So thereby tax was never been levied and thereby it should be refunded is a possible argument for us to take the credit if at all it has been paid. Some small returns related changes is there. There is a non-resident taxable person. NRTP is there, non-resident taxable person. For him, the returns filing due date has been reduced from 20th to 30th of the next month. And for a TCS e-commerce operator who is collecting tax at source, for him the returns filing late filing fee has been prescribed, which is 100 rupees per day, maximum up to 5,000 like any other return. So these are the few minor changes as far as the returns is concerned. So this completes my talk on the changes as far as the GST is concerned. Now onwards, Asiya Begum is going to cover the changes of customs and one single changes as far as central excise is concerned. She may be taking about 20-25 minutes. Then we can have an open house for all the questions relating to budget, and if it's something beyond budget also, if Asiya and me will be able to answer, we will be more than happy to answer. So thank you all for the patience listening. I'm staying back for the questions after Asiya has completed our questions. Please use the chat box and type all your questions so that we can quickly take the questions. Thank you all. Asiya, over to you. Well, visible Asiya. Go ahead.
Thank you so much, sir, for sharing your thoughts on the proposed amendments budget relating to GST. Now, let us just see what all are the changes proposed in the recent budget when it comes to Customs Act. Just to have an overview of what all are the custom changes which are proposed. First thing is the scope of proper officer is widened. See, the definition of proper officer as per customs is widened to include a few more officers into the definition of proper officer, thereby enabling the other officers also to undertake the customs audit and to issue show cause notices. And another change which is proposed is relating to valuation at the time of imports. There are certain few more additional obligations have been made enable on the part of importer at the time of import of goods to check the valuation of the goods imported. And few more amendments are proposed relating to advanced rolling, and certain rate changes have been done in customs tariff, and few more exemptions have been given, few exemptions have been withdrawn. All of that we will not be going in detail. I'll just tell you what all are the changes has been proposed, and then one change relating to central excise is what we'll be discussing in the presentation. Now, first, as I said, the definition of proper officer is widened. So why exactly the change has happened is there is one case law relating to Canon India. So in that case law, Supreme Court has held that in that particular case, the show cause notice was not issued by the customs officer. The show cause notice was issued by DRI officer, that is Director General of Revenue Intelligence. Now, who are these officers? The Director General of Revenue Intelligence is nothing but an agency that is run by CBIC to prevent. That agency works to prevent smuggling of goods, fake currency, money laundering, and etc. So the main work of that agency is to prevent smuggling of goods. So in that case, in the case of Canon India, the show cause notice was issued by DRI officer. The Supreme Court has held that the show cause notice which is issued by DRI officer cannot be held to be valid because they are not the they are not to be deemed as proper officers as per customs. See, in customs, they have given a clear definition as to who all will be covered, who all will be treated as proper officers. So in that definition, DRI officers are not covered. So because of that, they don't have any power to issue show cause notice. So whatever show cause notices issued by DRI officer will not be treated as valid. And it was also held that the power to issue show cause notice should flow from section. And the board, CBIC board, has entrusted certain functions to DRI officer wide notification. They have issued a notification under section 2, but the board is having powers to issue to entrust powers to any officer under section 6. So if they would have given if whatever the powers entrusted to DRI officers in wide notification cannot be held to be valid, because it is not, the board has not used its proper power for entrusting the functions to the DRI officers. So all these was held in case of Canon India. So because of this case law, wherein the Supreme Court has held this, then because of this, all show cause notices issued by DRI officers, those all will not be treated as valid show cause notices. Because of this, as a consequence of this case law, it is now proposed to include the officers of preventive, DRI officers, and audit division in the definition of proper officer as per customs. So now, at the proper officer definition of customs will include all these officers. So now, what all notices issued by DRI before this proposed amendment, it was not valid as per Supreme Court case law. Now it will help to be a valid show cause notice. And also the board, CBIC board, has also been assigned powers to issue, has also been assigned powers to entrust functions to the customs officers. And while assigning functions to the officers, the board may consider the criteria. They have given certain criteria which the board may consider, and accordingly can entrust functions to various customs officers. The criteria could be relating to territorial jurisdiction, class of person, goods, case, class of cases, etc. So there are many criteria given, which the board may consider while entrusting functions to various proper officers. So now, what all show cause notices were issued by DRI officers before this amendment, all those will it not be valid? The answer is they have given a validation clause as well in Finance Bill in clause number 96, wherein they said what all notices issued by DRI officers prior to this proposed amendment, all those will have to be valid. So now, not only customs officer, even DRI officers can do the audit and can issue show cause notices to the SSC and can demand taxes wherever there is a short payment. And the next change is relating to valuation. At the CBIC, like in the Finance Bill, it is proposed that the CBIC in certain class of imported goods and may impose few more checks that has to be performed by the importer at the time of importation of goods. In customs, if the importer and if both the persons are unrelated persons and the price is a sole consideration, then these two conditions, if it is satisfied, then whatever the valuation is adopted at the time of import need not be questioned. However, the CBIC has now they are proposed to include few more specified cases wherein, in case of specified class of imported goods and in case of specified importers, the CBIC may impose few more restrictions, may ask the importer to take few more declaration, and just to ensure that the valuation adopted is correct. So wherever board is having reasons to believe that the valuation adopted is the goods are undervalued at the time of importation of goods, then they may ask importer to take few more declarations. So this exercise will definitely increase the compliance burden on importer, because he'll have to do the documentation that the importer have to maintain will increase, the declaration that he has to obtain will increase. So all the checks, few more checks that he has to undergo, all that will increase. So all this ultimately will increase the compliance burden on importer. And now, because the compliance burden is increased, will be increasing on importer, then all these will lead to delay in clearing the goods from the customs station. And what exactly could be the impact and what exactly could be the practical challenges because of this amendment can be seen only when they give rules relating to this amendment, what could be the imported goods and what all declarations the importer is required to obtain. Once they give all that, then only we can see exactly the what all practical challenges are there. But as of now, we can see that definitely because of this proposed amendment, the compliance on importer is definitely going to increase. And next proposed amendment is relating to advance ruling. Now the scope, now who can apply for advance ruling in customs is any joint venture in India and or a non-resident setting up a joint venture in India in collaboration with the resident or non-resident. So currently only these two can apply for advance ruling as per customs. But it is proposed to widen the scope of application to advanced ruling. Now it is proposed to include any person having a valid import and export code. They can apply for advanced ruling as per customs. So now anyone who is having a IEC code can apply for advanced ruling and as per in customs and can obtain the ruling. And like today, if I am applying for advanced ruling in customs, then I have an option to withdraw from my application within 30 days of the application that I am making. Now it is proposed to increase the timeline given to the applicant for withdrawing from the application at any time before the ruling is given. So not only within 30 days, at any time before the ruling is given, an option is given to the applicant to withdraw his application for advanced ruling. And currently the fees that that the applicant have to pay for obtaining advanced ruling is 10,000. Now it is proposed that the fee which will be decided by the board will have to be paid by the applicant. And the most important thing when it comes to advanced ruling, which is proposed to be changed, is now like everyone knows that once advanced ruling is obtained and it is in the favor of the SSE, then it is applicable. It will benefit the SSE for its lifetime. But now it is now proposed to change the validity of the advanced ruling to 3 years. So now it is like existing, the binding of the ruling sought under advanced ruling is for lifetime, or if there is any change in the law based on which the ruling is sought, or if there are any change in the facts based on which the ruling is given by the officials, if there is any change, then only the advanced ruling will not apply. Apart from that, the ruling once sought will apply for the lifetime. Now it is proposed to change the validity to earlier of 3 years, or if there is any change. So we can say that any advanced ruling that you have obtained will be applicable to you only after 3 years. After the end of 3 years, if you want, again you can go and apply for one more advanced ruling. Now, what all advanced ruling which we have already sought, does it mean that the validity period is applicable only for fresh advanced rulings that I'll be applying, or even to old? They have clearly clarified that this validity period will apply not only to the new applications but also to the previous applications as well, and the 3 years will have to be counted from the date when this finance bill will have a precedent assent. So from that day till the end of 3 years, all advanced rulings will have validity. After that, if you want, you can go for fresh advanced ruling. And next proposed amendments is relating to the procedure that we have to follow at the time of import of goods at the concessional rate. Now the entire procedure is made online. The physical interaction with the department is reduced to a maximum extent at the time of import of goods at the concessional rate. If I am importing any goods, if I have an intention to import goods at concessional rate, then the importer shall provide one-time information. Only one-time information is required to be given to the department online in form IGRC1, and on acceptance of that form, IIN number, that is import of goods at concessional rate identification number, will be generated. That identification number will have to be mentioned on the bill of entry, and a surety bond also will have to be entered into by the importer. And at the time of clearance of goods at the customs station, the officer will allow the benefit of exemption. And once the bill of entry is filed, the bond will be automatically debited. So basically, they have given the entire procedure. They have proposed the entire procedure at the time of import of goods for concession rate of concession rate of goods. Now, the importer, whoever is opting for this, they have to maintain certain records. They need not intimate the jurisdiction officer on receipt of goods. Like till now, if any importer is importing goods, then he had to. It was mandatory for him to intimate the jurisdiction officer on receipt of such goods. Now it is not required. Only thing is that in case of any short receipt of goods, then all the details of short receipt of goods shall be submitted online in form IGRC02, and monthly statement on common portal in IGCR 3 should be filed. Like existing, it is quarterly statement that the importer is required to file. Now it is changed to monthly. They've also given procedure for goods which the importer is importing for the purpose of job work. The importer is required to maintain records and submit monthly statements of goods imported for job work. And whenever the importer is sending goods to the job worker, then the goods shall be sent under the cover of an invoice and EWay bill. Existing provision says that the job work, the goods cleared for job work can be cleared on the basis of challan. Now it is proposed to change that the goods movement should happen under the cover of an invoice and an EWay bill. And the maximum period for which the goods can be sent to job worker is 6 months. Beyond that, it is not allowed. Now, as I said, there are certain changes that have been proposed in the Customs Tariff Act. There are few changes with respect to the change in effective rate in case of goods such as umbrella, imitation jewelry, electronic goods, etc. So the basic customs duty is increased with effect from 2nd of Feb 2022. And in case of few specified commodities, if in case the effective rate in case of specified commodities is given in some other notification, like in customs tariff there is one rate, and then again concession rate is given in another notification, then the SSC will have to refer the customs tariff first for the classification and then go to the concession rate of notification. Now it is proposed that the notification, all those amendments will happen in tariff itself. So the importer will be sufficient if he is referring only the Customs Tariff Act. And there are certain exemptions and concession notifications given. And to the first schedule of Customs Tariff Act, a few more entries are added so that it is in the Indian Customs Tariff Act is in align with the HS 2022 issued by the World Customs Organization. Just to bring that parity, it is now few more entries are added in first schedule of customs. And as I said, few exemptions have been withdrawn. A few exemptions where the validity have expired, all those notifications have been withdrawn, and few exemptions which were already in effect, end date is given in few cases, and in few goods, the basic customs duty is changed in a phased manufacturing program. That is, in the phased manner, the basic customs duty will have to be applied accordingly for specific electronic goods. And change in respect to central excise tariff is 2 new tariff items, that is 2710, 1243, 1244 have been inserted, and it is relating to basically fuel. So basically these changes are made in 4th schedule of central excise. Because of this change, it will be aligned with the first schedule of Indian Customs Tariff Act, so that the custom central excise tariff is also in line with the customs. So these all are the changes with respect to the customs tariff, the Customs Act that is been proposed. I think all of you have received the budget amendments which we have prepared for our clients. In case anyone has not received, please please make a note of my email ID and send me an email. I'll share the budget amendments along with the relevant annexures. Especially for customs, in case you want the rate changes, then please ping me. I'll send you the annexures as well. Thank you. In case anyone is having questions, we can take up that.
We are open for.
Yeah, good evening, Sudhirji. This is Ashwin Garg from Orient Cement.
Yeah, Ashwin, tell me.
Sir, we have many MSME vendors. Now, they are most of the time they are not filing their either GSTR 1 or GSTR 3B. Mostly GSTR 3B, right?
Yes,
So, basis the GSTR 1, we are releasing their payment, right, of GST. And in second case is that they are neither filing their GSTR 1 nor their 3B. So, we are not at all releasing them their GST amount. Now, what the MSME Act says that you should make the payment of the invoice value to the vendor on or as per the agreed terms or within 45 days, whichever is earlier.
Correct.
Now, if I hold the GST amount, since he has not filed his GSTR 1 or he has not met the payment of through GSTR 3B, so that GST amount which I have hold, will it result in any non-compliance under the MSME Act?
Maybe yes. I'm not expert on MSME Act, but on the face of it, it appears yes.
Means we will be a defaulter if we hold the GST amount.
Correct.
Okay. Thank you. Yeah, Sudhirji, once again, can there be any questions be with respect to direct taxes?
No, I'm sorry. So neither Asiya or me are having any expertise in direct tax.
Okay.
Not be able to.
Okay.
Great then. So if no questions, it appears that either everything is clear or nothing is clear. I think it is the first one.
Yeah, good evening, Sudhirji. This is Srihari from Rhythm Johnson. One small thing, as just now one of colleague is raised the query. When that MSME is a defaulter, we know that it is a MSME is a defaulter under GST. As per the MSME Act, we can't hold it as at any amount of their vendor payments.
Correct.
So what we are supposed to be do? We are going to be indirectly we are going to be lose that that tax amount. No? If they are not paid, we can't able to avoid the input also. What is any mechanism can you able to sidestep from your end in respect to GST part?
What I look at is the vendor grading and non-dealing with the vendor, not giving the business to the vendor so that he himself will make a compliance if he wants to do your business with you.
There is only alternative, no other any transferring the GST portion to any other account and can able to show stating that we are releasing the payment.
No, sir. I am not looking at anything from a GST point of view. And again, maybe a expert opinion has to be taken as far as the MSME Act, whether it will be a default or otherwise. My limited knowledge, I have given that particular answer. Yeah, I think so, but yeah, better to take a better expert as far as who is very clear about the MSME Act.
Yeah, and at the same time, it is in respect to advance ruling. As per the customs, it is at advance ruling. It is at only now onwards is 3 years is a validity.
Correct.
Okay, this is applicable for the GST also.
No, only under customs. Maybe next year they'll bring it in GST.
Okay, now it is a GST. Whatever advance ruling, it will be permanent basis.
Correct.
As of now.
Yeah, or change of law.
Change of law. That is the common. It is a change of law. It is a mandatory.
Yes. Okay, sir. So thank you all for joining. I would like to thank Asiya and Namrata being here and coordinating and doing this particular session. I hope it was valuable. Asiya, have you planned any feedback forms? So we will be mailing the feedback form.
Yes,
Not now. We have the participant list. We will be mailing the feedback form along with the background material and the PPT which was being used now for your purpose. So please give your frank feedback so that it will help us to improve ourselves and do more programs. Asiya, do you also want to give the upcoming program details? Do you have that handy with you?
Yeah,
yes,
I don't mind, sir. One small query. Sir, in respect to the diesel issue is there. Diesel, it is basically it is applicable to the excise only. As of
Correct.
now, not yet come under the GST purview.
Yes, correct, sir.
Okay. Suppose in any time, okay, due to we are regularly using that diesel. Basically, we are the ready mix concrete business.
Hmm.
And we are many of the vendors are operating with us, transit mixer vendors. That is at vehicle vendors. It is available with us.
Yeah.
Due to emergency, couple of times we are issuing the diesel to vendors.
Oh, okay. So you are trading the.
Yeah, we are issuing the diesel to the vendor,
Hmm.
and we are debiting simply to them.
Okay.
Since we are not claiming it is any of the inputted on diesel, but emergency cases couple of times, and we are issuing the diesel to the vehicles. In that case, is it a GST is applicable?
No, GST is not applicable on diesel, sir.
But excess, any chance is there? Assessment,
Excess
SST
also will not come.
authority.
Excess also will not apply. Only thing is whether that will be considered as a sale, and thereby should you pay VAT is the question.
Now it is VAT is not applicable. That is what my feel, sir. We are not at registered under VAT. We are under GST only.
Now I think diesel sale is applicable to VAT.
Okay. In that case, we need to pay the VAT separately, and return also is to be filed separately.
Correct.
Okay. Thank you.
Thank you, sir. Asiya, next program details.
yes, sir. Yes, sir. So basically, we are planning a series of webinars to have for our clients and to have just to ensure that we don't lose touch and we have regular interactions. So the next webinar we are planning in the month of March on do's and don'ts under GST for closing of books of accounts. And then every month we are planning one webinar on first Friday of the month, and that is from say at the same time from 4 to 6 o'clock. And the details of each webinar, like this webinar, we'll be mailing to you so that you can just register yourself and make use of the webinars which we are conducting. So this is the list. In the month of April, we are planning to conduct a webinar on ITC matching concept. And then May, documentation, records, and reconciliations under GST, FTP benefits, reverse charge mechanism under GST, issues and solutions. Then input tax credit under GST with the practical approach, wherein we will be discussing all the issues and we'll try to have a practical solutions for the same. I would thank all of you for your patience listening, and in case if you have any more doubts, you can mail us. We would be happy to resolve those.
Thank you all. Bye. Have a nice week ahead. Bye. We can.
Thank you. Bye.
Yeah. Thank you, sir. Thank you.
Thank you, sir. Thank you.
Thank you, sir. Thank you very much. It's a nice presentation, and we are got it is a very good awareness about the amendments of budget. Really, thank you very much. It is
Wonderful. Thank you.